Joining us from Taipei for his views is William Dong. William is head of Taiwan equities at UBS Securities. So how would you, William, describe the state of affairs when it comes to the Taiwanese economy right now?
Well, at this point in time, I think what is quite clear to us is that we expect Q1 to be the low point for the year. We have passed the inflection point in terms of the low point for manufacturing activity, and we are now seeing encouraging signs for the pickup going to the Q2 and most likely continue on to Q3, Q4.
Indeed. What about the things which are the headwinds that the economy is facing right now? Is it chiefly the noise coming out of Europe and perhaps some question marks over America's recovery?
Well, at this point in time, I think what we're seeing is that we are seeing some inventory restocking going into the Q2 quarter, and that is obviously providing some additional boost to the overall activities. I think the question mark for the market as a whole is really to what extent is actually true underlying demand. And clearly, obviously, on the European side, I think demand is probably reaching a low point, but it's still hovering at the low levels in terms of the Taiwan tech perspective. We are seeing still things being relatively robust coming out of U.S., and there's still a bit of a mixed bag in some of the other areas around the world. So I think we're all watching whether the Q3 outlook can continue onward to its march.
Does Taiwan really now go the direction that mainland China goes in as well? I mean, how much is it really dependent on that?
Well, at this point, obviously in the last few years, we have seen some encouraging developments, such as more tourists coming through from mainland China. These things are, I think, what we call it incrementally positive for some of the retail sales, local consumptions. But at the end of the day, at this point in time, Taiwan's economy is still highly export-oriented. So I think the global movements in terms of the economic activity still at this point has a stronger impact in terms of how the rest of the year plays out. So I think most of the Q2 is now well priced in by the market, and what we really need to see is, what type of strength do we see in Q3, and will it continue onward? There are obviously some encouraging signs. We are seeing some more product launches on the smartphone side. There also is more potential for on the PC side with the Windows 8 launch, Ultrabook launch. I think these are things that can, in fact, lead to some parts build or box builds into the Q3 quarter. But I think the market is still quite hesitant, given that they're not sure what to make of this and whether all this stuff will actually sell through into the Q4 quarter. So everyone's watching this closely. Clearly the inflection point has passed, but it's really trying to figure out what the true end demand looks like at this point.
Absolutely, and of course you mentioned a lot of technology companies there, which is really one of the mainstays of the export dynamic that Taiwan does have. On High Precision coming out with, well, terrible numbers today, and of course a downgrade sending its share price down. But it's not really reflective of the whole industry, is it?
No, I think there are a lot of company-specific issues that's going on back and forth. Clearly, on the upstream semi side, things are actually doing better than what previously people anticipated going to the Q2 quarter. Lots of strength coming through. For the hardware companies, I think a bit of a mixed bag. I think we have a bit of a product transition ahead of new product launches. Some companies are showing, I think, slower momentum going to the Q2 quarter. And obviously, certain companies still have to deal with cost issues, dealing with the ability to migrate some of the production more inland and how to actually translate down to the net income level. So I think it's certainly not blue sky scenario yet. It's still really case by case, one step at a time approach. I think the way we look at the rest of the year for Taiwan.
William, reading your research, you're saying there's also consumer spending is a bit of a concern, especially if we see a downturn in the local equity market. Why so?
Well, clearly, if the export cycle slowed down back in Q1, the consumption kind of follows. So consumption is a bit of a lagger. So I think once the export cycle picks up, I think the consumption, will gradually come back again. But there is a bit of a lag, so I think it will take a bit of time. Obviously, you have a bit of inflation concern coming to the market with the electricity price hikes and the gasoline price hikes. So these things are obviously going to, in the very short term, dampen some of the consumer sentiment. So the market and the consumers have to kind of digest through all of this before I think we can start moving forward. But I am encouraged, I think, by what we're seeing right now in terms of some of the order book that's coming through into Q2 and likely into Q3.
William, thank you so much for joining us, and thank you for your time. William Dong there.